If you have a Medicare supplement plan, I need you to stop what you're doing right now and listen up. Seniors are opening their mail to see 20, 30, even 40% rate increases. Now, this can be shocking, and we're going to break down why this is and what we can do to fix this. Hey, it's CJ with eCare Insurance. Today, we're going to be diving in and seeing why these insurance companies are hitting you with such big rate hikes and what you can do to stop it. Now, why am I making a video about this? Because every week I get questions from people just like you wondering why the insurance companies are raising their rates so high, if it's even legal, and what they can do to fix it. And let's just say the insurance companies are not in a rush to give you this information. So I'm going to break it down to you as simple as possible because you deserve to know and you deserve to keep as much of your hard-earned money as you can. Let's start with the elephant in the room, medical inflation. We've seen prices in the hospital go up 15 to 20%. This means that a normal overnight stay that would have cost you $1,800 a couple years ago, overnight has jumped up to $2,500. And what this means for Medicare supplement companies, they're on the hook for what Medicare does not cover. So with inflation going up, they're going to have to worry about paying more for each claim. And second, what the insurance companies are calling the COVID catch-up. What this means is that post-COVID, there's more seniors that are going out and getting the surgeries or the checkups that they weren't during COVID because a lot of people were scared to leave their houses. So for the insurance companies, this kind of hits them as a double whammy because one, the cost has gone up, and two, there's more people actually going to the doctor. Third is going to be the actuarial miscalculation. Whenever companies were setting their rates about 3 or 4 years ago, they didn't actually take into account correctly how much was going to be affected post-COVID. And how this affects you is these companies are having to play catch up on your premiums. And you might be wondering, why is this all happening at one time? Well, these companies have to go through the state, and this process takes about 6 to 12 months to get their new rates approved. So it's hitting all at once like a storm. Another reason is some companies come in the market and they get a little too greedy. They try to set the lowest rates possible to get as much of the business as they can. And it comes back to bite them on the back end whenever they actually have to start paying the claims. Now let's get down to why you're actually here. You're looking for a solution. So the first option you're going to have is to shop and compare your current plan. Now, in a lot of states, this may include going through underwriting, but it's still worth a shot. You can check rates, and having an agent to help you make sure that there's going to be good rate stability will also make a big difference. Your second option would be a plan downgrade. Now, what this means is, say, if you have a plan F, looking at going down to either a plan G or a plan N, or if you have a plan G, looking at plan N or high deductible G. Now, all these plans are still great. You're still not going to have to worry about networks, referrals, anything like that. You might have some additional costs, such as copays, or if you're going from F to G, having a deductible. The third, which most people with a Medicare supplement don't want to hear, would be looking at the Medicare Advantage route. If these rates are just getting too much for you and you can't handle them, you can't pass underwriting, maybe the only other option you have if you're in a state that doesn't have a birthday rule would be getting a Medicare Advantage plan. Again, having an agent that's actually going to look at your doctors, your prescriptions, your pharmacy can definitely help out in this transition. And my biggest piece of advice would be taking a look at your policy annually to see what the rate increase is going to be and if you need to make any changes. Because if you do it while you're still healthy, you can definitely get some better rates. So that's something to keep in mind. And if this video helped you out, if you could leave a like and subscribe, it lets YouTube know that this video can help other seniors that were in the same situation as you. And if you have any more questions, go ahead and leave a comment. And I know this can be stressful, taking a fixed income and running it even thinner, but just know that you have options, you can make changes, and we can save you a lot of money. Don't let the insurance companies make you feel helpless. Stay informed, stay proactive, and we'll see you in the next video.